Welcome to this week's episode of Accredited Investor Markets Radio. Each week we speak with you about investing in alternative assets. Unbiased and beholden to no one, Accredited Investor Markets Radio does not accept advertising from any investment firm or financial advisor. Accredited Investor Markets Radio is the spoken word sister of AccreditedInvestorMarkets.com, the internet's most comprehensive and unbiased educational resource about crowdfunding, angel investing, venture capital, private equity, private shares, and other investment classes beyond publicly traded stocks and bonds.
Hello everyone and welcome to Accredited Investor Markets Radio. I'm Christopher Cahill, your host. Later on I'll be speaking with Michael Terrien, a registered investment advisor, who will be talking about the fiduciary rule and its potential application to broker-dealers as well as registered investment advisors. He will also talk of robo-advisors and holistic investment advice. But first, let's go from the heights of the global economy down smaller and smaller until we reach a little bridge in Holland. So now I refer to a white paper entitled Alternative Investments. It's time to pay attention. It's written by Strategy and, which used to be called Booz & Company and now is part of PwC, and can be found at www.strategyand.pwc.com. Why am I reading to you from this? Well, because it gives you an atmospheric picture of alternative assets being hedge funds, private equity groups, commodities, and real estate. Globally, we're at about 10 trillion in overall value of such alternative assets at this point, but we're going to get to 18 trillion by the end of this decade. Let me read. By 2020, global assets and alternative investments will grow to US 18.1 trillion from 10 trillion today. The growth is driven by changes in both the investments and the investors. New, more liquid investments, including alternative-focused mutual funds from top-tier firms like AQR and Blackstone, have lowered the barrier to entry for investors who might never have considered traditional hedge funds. As an aside, why would they, given the performance of traditional hedge funds lately? But that's an aside. Back to the quote. At the same time, the world's pool of retail investors is growing. Emerging economies have created a new global class with assets to invest. The greatest growth is among the mass affluent, those with 100,000 to 1 million in liquid assets. The wealth held by the mass affluent will grow 50% faster than assets held by high net worth investors, those with more than 1 million. Okay, so the pot is growing for alternative investments as defined in that article. But now let's turn to what venture capital is doing. The estimable website, privco.com, P-R-I-V as in Victor, CO.com, always interesting, sets forth in its July 10th edition new venture capital deals. Number one, China's second largest RMB competitor, XIAOZHU, Zhazhu, I hope, has raised 60 million, valuing it at more than 300 million. That's the second largest RMB competitor in China. The largest has about $1.5 billion. But anyway, venture capital contributed to Zhazhu as described. Babbel.com, and that's Babbel with 3 B's, is a German language learning startup, has raised 22 million. Interesting. I wonder how well subscribed the German language learning startup is in Greece. Okay, maybe I shouldn't have said that. Didi Kuaidi, that's D-I-D-I space K-U-A-I-D-I, is the largest of the Chinese Ubers, raised $2 billion in a funding round. So China is funding an Uber competitor to the tune of $2 billion, while France jailed 2 Uber executives for what? Parce que pourquoi? 2 different approaches, the French approach and the Chinese approach to this sort of innovation. Finally, Harry's, a growing men's razor subscription service, has raised $75 million in a Series C round. So I pause only to note the kinds of businesses that are receiving venture capital in this Privco survey. First, we have an Airbnb competitor, which, what do they do? Well, they distribute lodging, don't they? Isn't that fundamentally what Airbnb does? We also have an Uber competitor. What does Uber do? Well, it essentially distributes rides. It doesn't change the number of cars out there, just as Airbnb doesn't change the number of dwellings out there. They just distribute these things more efficiently. And another one was a razor subscription service. Now, I don't have a big problem, and I shave my head finding razors at the corner drugstore. But this company doesn't change the number of corner drugstores or razor manufacturers, doesn't move them anywhere. All it does is distribute razors more efficiently, at least that's the bet the VC people are making, than was done before. Our final in our quartet is Babbel.com. I don't know that that's really distributing. Maybe they have an innovative way of teaching German, and maybe the Greeks will all be speaking German before too long. Turning to smaller scale matters, now we're talking about maybe 7-figure or 6-figure, even 5-figure matters. If there have been entities like Kickstarter and Indiegogo and GoFundMe and TubeStart, which foster crowdfunding campaigns, well, isn't expertise going to grow up around it? That is, how do you go about a crowdfunding campaign? What are your goals in the crowdfunding campaign? Simply to get enough money to get off the ground? Or are you gauging interest in your project or your product before investing more money or seeking larger amounts of investment from others? Perhaps a successful GoFundMe campaign can help attract actual equity investments from VC firms, among others. Well, I'm here to tell you about Crowdster, K-R-O-W-D-S-T-E-R. Why? Because Crowdster put out a very interesting palette of different successful crowdfunding campaigns, but Crowdster, and they must have many competitors, also offers expertise for crowdfunding. Well, what kind of expertise? Well, it has a database of crowdfunding supporters on various social media. It has analyzed successful social media and crowdfunding campaigns. It knows where to do press releases. It has media lists. It has platform analytics, supporter analytics, campaign analytics, category analytics. Just to read it makes you think, well, of course. So I imagine Crowdster and its competitors are fighting tooth and nail. Meanwhile, as the president of an orchestra, I'm thinking, we could do a crowdfunding campaign, but I'd like it to succeed. Maybe it would be worthwhile to engage an expert. But on to its crowdfunding success stories. As we talked a minute ago, the VC success stories seem to be grouped around distributing existing assets in the world in a more efficient manner. What kinds of things are being funded by crowdfunding according to the Crowdster list? Well, by far the biggest success at $1.5 million was crowdfunding for a program. It might be a movie called Bard's Tale 4. It's not the only movie. There are other movies on this and documentaries. There's a documentary on Scottish media. There's a documentary on Cat Island called the Cat Island documentary, raised almost $34,000 for the Cat Island documentary. This is where money goes. Of course, there's lots of crowdfunding for products as well. Very small wallets, lighting systems, and one machine does it all, including 3D printing. There's a crowdfunding project for the feminist named Mankiller. And this crowdfunding project is trying to get Mankiller put onto the $20 bill. I can't say I oppose it. Just so long as they leave Alexander Hamilton on the $10 bill, they could put any luminary on the $20 bill as far as I'm concerned. But let's move on to Holland. A Dutch startup, another startup. And by the way, this story is told in The Guardian, and the title of the article is Dutch Startup Plans First 3D Printed Steel Bridge to Span Amsterdam Canal. And this is from June 17, 2015, and it's about a 3D printed bridge. So it's a machine, a 3D printer. You feed the material into the 3D printer, it processes the material into bridge material, and it slides up whatever it's built and makes its way over the canal step by painstaking step. Basically, the 3D printer is a connection of an advanced welding machine to an industrial robot arm. It uses intelligent software to operate these machines so they can print very complex metal shapes which can differ each time. The technique removes the need for scaffolding, as the robot arms use the very structure they print as support. There are a number of interesting innovations going on there. If there's no need for scaffolding, perhaps building fixtures can be placed in more interesting and innovative places, which will allow the architects to go wild. At any rate, Holland, the first 3D printed steel bridge. On to the interview. We have here with us Michael Terrien. Michael Terrien is the founder and managing member of West Loop Financial, LLC. West Loop Financial is a registered investment advisor. West Loop provides investment advice and portfolio management for clients based in the belief that very broad diversification, a dedication to minimizing costs and maximizing tax efficiency, and portfolio construction emphasizing the equity asset classes that have historically generated premium returns, together form the best bet for enhancing risk-adjusted after-tax returns over the long term. And as registered investment advisors, of course, West Loop takes a fiduciary approach to its work, and Mr. Terrien has a long background and distinguished background in law, practicing at the highest levels at some of the largest law firms, commercial litigation, corporate finance, and restructuring, all of which bear upon the market for securities. Further, having worked in such an intense and detail-oriented industry before must have prepared Michael Terrien for carrying on the same habits into the West Loop Financial LLC's world. And we welcome you, Michael.
Hi, Chris. Thanks for having me.
Well, today we've decided that we're going to talk about the importance of fiduciary advice, sources of advice in the industry, as well as what you call, Michael, holistic financial advice. But let's start with understanding what the sources of advice are in the industry. Very often people just start talking about advice and getting it from so-and-so, but there are different sorts of places one can get advice. Let me just create a hypothetical. And this is not an unusual hypothetical. They're real people to whom this corresponds. An early or mid-career professional is reaping the financial rewards of partnership and has 6 figures a year to invest suddenly and wishes to branch out from his or her IRA. What are the sources of financial advice such a person has available to him or her?
Well, there's really no shortage of financial advice out there, Chris. There are an awful lot of people offering it at institutions, large and small. From a regulatory perspective, from what I've seen, there are really 3 different kinds of advisors who will provide some form of investment advice. They're broker-dealers, and there are a lot of large broker-dealer firms that are household names, as well as plenty of smaller ones. There are insurance companies or brokers who sort of double as financial advisors, and there are what are called registered investment advisory firms, which is what West Loop Financial is.
Oh, it's the insurance guys who are always calling me, thinking they've got something to earn from handling my finances. It's funny. I don't get calls from the broker dealers or the investment advisors.
That surprises me, because one of the few things that I think unites all 3 of them is a desire for business growth and a desire for new clients. So I think you could conceivably get calls from people in any one of those 3 categories.
All right. Well, let's say one is one of these early mid-career professionals who is suddenly doing a lot better than he or she was before, and now has to think about, seriously about how to handle a significant amount of money. What's the differences? What are the important differences, I should say, between the three different kinds of advisors you've identified?
Well, in theory, and I think that there's an on-the-ground difference from the theory, but in theory, they really have different core functions. Insurance companies obviously issue insurance products, and insurance brokers obviously sell insurance products. Broker-dealers are, for the most part, in the business of executing transactions and providing custodial services for funds and other assets. And RIAs are really they're a pure advice kind of model. An RIA provides advice but doesn't hold your funds, doesn't create or sell specific products. It really just advises an investor on what to do with their funds.
So, Michael, you mentioned RIAs. I assume that means registered investment advisors. With whom is an RIA registered, and what does that mean?
Well, there's really two places that an RIA will be registered. For a larger RIA, over a certain threshold in assets under management, they're registered with the Securities and Exchange Commission, the federal SEC. And for a smaller RIA, it's with the State Securities Commission. It's a business I started 9 months ago, and I'm registered with the Illinois Securities Commission as well as the Michigan Securities Commission.
That's funny. People don't normally think of state authorities, but they're everywhere as far as overseeing securities transactions.
Yeah, in the RIA space, I think they probably do probably the majority in terms of volume of institutions. Most institutions aren't big enough to be registered with the SEC. Although in terms of volume of assets managed, because the really large ones are registered with the SEC. The SEC has a big role to play, and as is true with a lot of state regulations, they're the federal regulations often take the leads, and state regulators often then mimic what federal regulators do. So you see a lot of similarities between state regulation and federal regulation.
Given the regulatory environment in which an RIA operates, is an investor then pretty safe with an RIA?
I think that there are real advantages to taking investment advice from an RIA. It is of the three types of advising institutions I mentioned, it's the one and only that as a legal and regulatory matter is required to act as a fiduciary for its clients. And I think that's a real advantage. Essentially, a fiduciary will be required, first of all, to put a client's interest first. It is not a sales relationship. It is a professional relationship, more akin to, say, a doctor or a lawyer than it is akin to, say, walking into a car dealership. It's not an arm's length relationship. It's a relationship where the advisor has a real duty to put the client's interest first. That also comes with transparency about things like the compensation that an advisor is getting, as well as any conflicts that the advisor may have in the insurance or the broker-dealer environment. You don't necessarily get that kind of transparency. And so I think that those are real advantages to an RIA. You've got somebody who's disclosed what their financial interest in their relationship with you is, and you know that you've got somebody who's got a legal obligation to put your interest first. But I don't think that's a guarantee. I mean, obviously, no regulatory environment can guarantee wisdom or prudence on the part of an advisor. Clients still have to decide who to trust and have to have some wisdom of their own in order to figure out who to trust. I think that the fiduciary relationship is sort of a gating issue, and it's helpful, but it's not a solution to every problem, and it doesn't guarantee good service from an advisor, certainly. Okay,
so remembering the three different sources of investment advice that you've set forth, let's change our hypothetical. Now we have a late career non-professional, so someone who's perhaps less sophisticated in financial matters, has saved with care and received a bequest. This happens from a recently deceased relative. Now she has some money and needs retirement advice because that's looming. Her total assets are not so large, probably under six figures or just barely six figures, but they're crucial to her. What are her options for advice? Are they the same as they are for the hotshot young go-getter who is making piles for the first time in his or her life?
Well, all the same three kinds of institutions are still out there, and to a greater or lesser degree, they all may be willing to serve her. But candidly, a lot of professionals working in the financial services business have spent a lot of time on education. They spend a lot of time keeping up on things. The good ones work very, very hard for clients, and they take, regulatory and legal risk in providing advice to clients. So they want to be compensated typically for that. And with a smaller pot of money, that can be very difficult, and that's a real problem. I mean, for someone who's barely got a six-figure portfolio, it can be difficult to justify having that person pay the kind of fees that somebody who's really going to put a lot of time and effort and background and experience and education into it is going to want to earn. So yeah, that's a problem. I don't know that there's a super great solution to it. Frankly, it's in a lot of ways it's no different than providing medical care or legal advice to people of modest means.
Maybe there is a solution, and we all watched the movie RoboCop when we were kids, well, at least I did. What about robo-advisors? I've been hearing about them, but I don't really understand what they are in relationship to the three different kinds of advisors you've already discussed.
I'm certainly no expert on robo-advisors, and there seems to be a lot of them coming into the market in the last few years. From what little I've looked at them, they seem to vary in terms of what they do. There may very well be a space for them, and certainly some people are going to use them. They certainly have the advantage of being low cost. As far as I know, though, they're kind of limited to portfolio construction for people. They really don't provide kind of full-service financial advice in the way that, say, a good RIA hopefully will. So there may be a space for them, but I don't think that I don't think they really compete with the kind of services I provide. For example, the portfolio construction is an important but by no means predominant part of what I do for clients.
Well, let's talk about what you do for clients in a minute, but let's get back to the headlines if we could. Robo-advisors is kind of a lesser headline, but the Department of Labor fiduciary rule is a bigger headline. Mm-hmm. So the Department of Labor issued regulations. I don't think they've gotten entirely through their comment period. Maybe they have. But they've caught.
I did some research on this yesterday. They have not.
And there's been a great hue and cry among certain players for and against the fiduciary rule. So what is it, and what are the best arguments for or against it?
Well, first of all, as a fiduciary, it shouldn't come as a surprise that I am wholeheartedly in favor of the fiduciary rule. The fiduciary rule, as I understand it, is essentially requires any advisor who is providing investment advice in connection with a retirement account. That could be an employer plan, a 401k plan, a 403b plan, or it could be just an individual personal IRA, which is how it really is going to catch up a lot more advisors to act as a fiduciary in connection with giving advice. And as I said, there are a lot of people in broker-dealers and a lot of people in the insurance world who are giving advice on those kinds of accounts today who are not legally required to act as a fiduciary. So this rule, if it becomes effective, would require them to act as a fiduciary if they're going to give advice for those kinds of accounts. The arguments for it, to me, are simple. I don't know why you would go to a professional for advice if you weren't expecting them to give advice that was going to be in your best interest. And I think it's perfectly reasonable to expect that a professional who you're paying for advice discloses any conflicts they have and is transparent about what you're paying. I came from a long legal career. Those are the kinds of things that are so second nature to me that I can't imagine as a professional not doing that. And really, that's a big part of what drove me toward the RIA side of the financial services world. I can't imagine giving advice without those things. I guess the argument against the fiduciary rule is simply that it'll raise the cost of providing advice for a segment of the market and thereby maybe diminish some of the advice available for some investors. I don't happen to buy that argument. I think that advice that's not in your best interest probably isn't advice worth having in most cases. But I think that's the argument against it, is that it'll make getting advice even more impenetrable for smaller investors than it is today.
Well, what you say implies that customers really should not be looking at insurance companies or broker-dealers. Are you willing to go that far?
For investing advice?
For investing advice for retirements.
First of all, there are people in both of those environments who will act as fiduciaries, and I think that an investor is well advised to ask that question to whoever they're thinking about seeking advice from, but I personally wouldn't take financial advice from someone who wasn't acting as a fiduciary for me. I wouldn't take legal advice from somebody who wasn't acting as a fiduciary for me, and I wouldn't want to go to a doctor whose first thought about how to treat me was what'll pay me the most money, rather than what's the best course of treatment for whatever ailment I have.
Well, I wonder if the veterinarian I saw this morning was one of that latter type. But as a lawyer myself, I hear what you're saying about it being second nature when you're serving people in their personal interests to adopt a fiduciary approach. Well, okay, let's move from there to our second theme. Holistic financial advice. Holistic financial advice. That sounds nice, but what is it?
Mm-hmm. Well, first of all, holistic is just a word I like to use. I know other people in the industry who use it, but a lot of people kind of look at me cross-eyed when I use it. To me, it really is just the difference between providing purely investment advice and providing integrated financial advice that looks at all aspects of a client's circumstances, goals, plans, and existing arrangements, and makes a best effort to better align what a client is doing in all areas of their financial life with their goals, and makes a best effort to minimize costs in all areas of their financial life, and makes a best effort to just improve the choices that a client has made. It could be anything from, go ahead.
Well, I was just going to say, to put it a little differently, it's sort of like the difference between giving a client what the client walks in and says the client wants, and giving the client what the client needs based upon a broader investigation and inquiry into what they have and what their options are.
I think that's very well said. Yeah, I think that's exactly right.
So the whole and holistic financial advice is quite a bit larger than the whole for non-holistic financial advice.
Yeah, the truth is, with clients, I spend far more time talking to them about what they're doing, where they are, what their circumstances are, and where they want to go, and far more time pouring through information that they provide me, the lawyer's skill I developed, but actually reading documents and whatnot, and figuring out and understanding oftentimes things that the clients don't understand themselves about their affairs. Very oftentimes things that clients don't understand themselves.
Right. You're turning unknown unknowns into known unknowns, and then teaching.
Exactly. And it, even with very sophisticated clients, and my clients tend to be, those professionals with six figures to invest and fancy educations, but even with very sophisticated clients, very often they just haven't taken the time, haven't bothered to understand their own affairs as well as they might have, and digging through things and looking for opportunities turns up nuggets very often. It really does. It's surprising how often it does.
Well, you're getting close to giving an example. How about an example of a holistic financial advice, maybe regarding estate planning or something like that?
Estate planning is a great example. I mean, the core function, as I said, of a registered investment advisor is giving investment advice, but every client that I work with, I want to see their estate plan. I've seen plenty of clients who don't have one, clients with multi-million-dollar net worths who don't have one. Oftentimes, even if they've had one drawn up, it hasn't really been implemented. You'll see I like to tell the story of the client, and I've seen it repeatedly, who has a very nice set of documents drawn up by a fancy law firm that creates trusts and creates a will and puts a bunch of stuff in place, and then it's got a letter on top of it that says do these 16 things in order to implement this plan. And I show the client the letter, and I say, have we done these things? And they say, I don't know, I've never seen that letter before, and it was there. And so you've got a client who spent thousands of dollars on a really professionally done estate plan that isn't worth the paper it's printed on because it hasn't been implemented. So that's the kind of thing that I'll often help clients do. And in the estate planning area, another big ticket item is people set beneficiaries on retirement accounts or life insurance policies or whatnot, and don't think about it for years and years and years and years, and their circumstances change. And so, one of the things that I'll do with a new client is take a look at all those items and make sure that those things are consistent with their estate plan, are consistent with their existing goals, and so that if something happens, estate plans are planning for the inevitable, and at some point they're going to be necessary, they're going to be used, and we want everything to be tied together so that they're used in the way they were intended to be used.
Well, that's one element of trusts that has certainly shown up in my practice as a lawyer. But I'd like to ask you to draw on your background as a restructuring lawyer and your current financial advisory. Let us suppose you have not a lawyer or doctor, but rather a business owner whose business has gone really well. And so this person sets up a bunch of trusts. The beneficiaries are not himself, but rather members of his family and so on. Do you think you're perhaps a lot more alert to the effect on those trusts of a potential insolvency in the primary company? Because companies come and go. Great businesses get destroyed by creative destruction out there. And so do you believe you're alert to that in a way that maybe others may not be because of your legal background?
I think because I practiced insolvency law for a lot of years, I'm probably more alert to insolvency issues than most people are, sure. When you have a hammer, everything looks like a nail. I have a background in insolvency law, and so I can't look at anything without thinking about the insolvency implications for it.
Well, so if you look at holistic advice, I mean, to some degree, it sounds like what a person who thinks about it for a while would expect from an RIA, and that for high net worth investors, that would be the standard, and so it's pretty readily available. Do you think that's an overstatement that it's pretty readily available? Is it less available than it ought to be? Are people mailing it in, to put it probably too negatively?
Well, some people are obviously mailing it in anywhere in the world. Some people are going to mail it in.
Right.
I think that good financial advice for a higher net worth investor who's willing to pay reasonable fees is available. I flatter myself to think that I'm providing very good financial advice to clients and trying to provide it to new prospects, but I don't think I'm alone by any means. I think there are a lot of good advisors out there, and I've met a lot of good advisors. I've met good advisors here in town in Chicago. I'm affiliated with a nationwide alliance called the BAM Alliance of really like-minded advisors, and my impression from a lot of interactions with people in that alliance is that there are a lot of very good advisors there, and I do think good advice is available. I also think that you've got to be a little discerning in order to make sure you get it, and I think a lot of people who need it, frankly, don't, because finding it can be a little difficult. It's out there, but you may have to go through a number of people. You may have to try different advisors in order to find somebody who's really willing to dig in and really work for you. Or you may get lucky the first time. I think it's a little harder I think the higher your net worth, sort of the more need you perceive for it, the harder you look for it, the more you're willing to pay for it, the more likely you are to get it. My own sort of niche really is those, mid-career professional types, really people who are a lot like me, and those are the people that I'm working with for the most part and trying to work with, and they're really kind of on the cusp. They're people with, seven-figure portfolios, certainly can attract financial advice, but may not necessarily attract real intense attention from a lot of the large institutions, may serve much higher net worth individuals. And so it's actually kind of a nice niche for me, I think, to be able to try to bring the kind of attention that somebody with $20 or $30 million or $50 million might get to somebody with $2 or $3 or $5 million. It's out there, but I think you got to look for it.
Okay, good. Well, along those lines, just reading your own account of your firm, the emphasis is on broad diversification, dedication to maximizing tax efficiency, and portfolio construction emphasizing the equity asset classes that have historically generated premium returns. This sounds very geeky and data-driven and not very exciting. It's not as though get them on the ground floor before the next fracking boom and get them out before the next fracking bust. It doesn't sound like what you're doing.
If you're looking to roll that dice, I'm not the guy to talk to. To me, this is really important for people. I think that accumulating wealth for your future and accumulating wealth for your legacy goals is a really important thing for a lot of people, and I sort of take it too seriously to gamble it like that. The portfolios I construct are extremely broadly diversified. Literally, they cover most of the global equity markets. And their only effort to sort of outperform the global equity markets is really based on a real body of academic evidence that suggests that there are certain areas, certain asset classes that historically have outperformed in a significant way vis-a-vis the market as a whole. And so the portfolios will be tilted toward those asset classes typically, but they're intended to provide slow and steady growth rather than wild swings and wild gambles and either home runs or collapses.
The tortoise, not the hare.
The tortoise, not the hare. That's a good.
All right. Well, that's consistent, by the way, with what your BAM colleague Larry Swedroe was saying on the air weeks ago. And guess that, my friends out there, is a indication of the BAM brand, perhaps.
Hopefully.
Yeah. All right. Well, Michael, thank you. It's been really interesting, and I'm glad we got to talk a little bit about robo-advising and about the fiduciary rule because they're newsworthy. And not enough is said to advance understanding. It's just people out there advancing their partisan agenda. So I really appreciate it.
Sure. It's been good to talk to you, Chris. Thanks.
Accredited Investor Markets Radio is produced by Stephanie Strait. We thank you all for participating in this and look forward to doing it again soon.
Thank you for joining us. If you enjoyed this episode, you can subscribe through iTunes or Stitcher, or you can download our app from Libsyn. You can also listen right on our website, www.aimkts.com. Each week, Accredited Investor Markets Radio brings you news and education about investing with a focus on alternative assets. To see a short written summary of this episode, go to www.aimkts.com. Accredited Investor Markets Radio is a production of Financial Poise Radio Productions, LLC.